Hello everyone, and today we're going to talk about should you buy Google before or after its 20-for-1 stock split. We're going to look at what happened last time Google did a stock split. Now remember, past performance does not indicate future performance, but I think it does give us a good indication of what might happen and when the best time might be. At the end of this video, I'm going to show you exactly what my Google strategy is for buying or selling Google before this stock split. So should I buy before it splits or after? Investors and companies alike, they view stock splits as positive events. Not reverse stock splits, those are often very negative, but regular stock splits are often seen as a very positive event. So let's look at why that is. When a board of directors declares a stock split, it's a vote of confidence that the company's share value will continue to increase over time. Stock splits can increase affordability, and that's very true here with Google at over $2,500 a share. With this 20-to-1 stock split, that is going to make it very affordable for average everyday investors, not only to buy one share, but also to buy up to 100 shares, which is important if they want to trade options on the stock. Even in the era of partial share ownership, allowing investors to buy just partial shares of stocks so that they don't have to come up with the full value to buy just one share, even in that era, even with that being a possibility, investors still view affordability on the stock price. This means a broader range of investors may find the stock more attractive, thereby increasing the demand for that stock. Now, just briefly, let's look at, before we get into the details of Google and some other recent stock splits, a stock split on its own shouldn't really matter. Essentially, the value of the company is not changing at all. If you have a share of, let's just use a 4-for-1 stock split as an example. If you have a share of a stock currently trading at $100 and it splits into 4 shares at $25 each, you still have $100 worth of stock. With that being said, many stocks have shown strong performance after a split, and we're going to look at some of those performances in just a second. In other words, selling your shares of a stock prior to a split isn't always the best decision, unless, of course, you're not well positioned to continue holding that stock. Now, because stock splits lower the share price of the stock, it does tend to attract more attention of many investors. And this has historically been a positive thing for stock splits. Some stocks have historically done very well in the weeks and months leading up to that stock split. Alphabet, or Google's market-leading position and its business prospects indicate that it could potentially have a bright future. So let's go ahead and take a look at the past, because looking to the past can sometimes provide a glimpse into the future. It's been a long time since Alphabet stock last split. In fact, the last time that this happened, the company was still officially known as Google. And that stock split occurred in 2014. And now with that, what's noteworthy about this previous stock split is that it was responsible for the creation of Google's Class A and Class C shares, giving us the ticker symbols GOOG and Google. Now, this led to lots of controversy and lawsuits over the rights and the voting of each of those different kinds of shares. But during the nearly 2 years after the announcement of that stock split in 2014, Google shares climbed roughly 74%. There certainly have been several high-profile stock splits in the last few years. Let's take a look at Apple. Apple saw its shares climb nearly 34% following its 20-for-20 stock split. Tesla was up 81% since its stock split, and The Trade Desk was up 27% since its 2021 stock split. Nvidia is up 24% since its 2021 stock split. So as you can see, we all know that a stock split does not increase the fundamental value of the company. But from what we've seen in the market recently with Tesla and Nvidia, investors and people certainly like these stock splits. Now, outside of this stock split, there are plenty of reasons to believe that Alphabet will continue along the same upward trajectory that led to this celebrated stock split. First off, let's take a look at Google's search engine dominance, as it seems to remain unchallenged at roughly 92% of the worldwide search engine market belongs to Google, despite what DuckDuckGo might tell you. Alphabet, as a result, has a leading and dominating position in digital advertising. They have an estimated 29% of the worldwide digital ad spending in the world. And now let's not forget about Google Cloud, which has quietly ascended into the top just behind Amazon Web Services and Microsoft. So here's my personal trading plan with Alphabet heading into the stock split. Now, this is not a recommendation. This is me sharing what I am doing with my own money related to the stock before the split, especially with the little bit of downdraw that we've seen recently here in February of 2022. I believe that I want to hold Alphabet as a long-term hold, and I want to develop more of a core position. I also like to trade options, particularly selling upside covered calls against my stock to essentially give me a dividend or an additional yield as I hold that stock over time. One of the disadvantages of Google stock has been the overall price of the stock. In order to have 100 shares of Google at its current price, it would take a good portion of my portfolio. However, when that reduces down to the $100, $150 range per share, it becomes much more manageable for me to have that core position of 100 shares of stock. With that being in mind, and looking at this historical trend, I think it's better to try to have that position in place prior to this stock split, as once the stock splits, that new price is going to increase demand. That's one of the reasons for having the stock split. So I want to buy my shares and have my position in place pre-split. Now, with that in mind, I don't have a crystal ball, and I have no way of knowing whether those shares are going to be up or down in the next day, 2 or 3, and I'm not going to try to time that market with this core position of my portfolio. So what I am doing is I will be buying 1 share of Google every month for the next 5 months before that stock split. That will allow me to have 5 shares of Google pre-split. Now, once that 20-for-1 stock split happens, those 5 shares will become 100 shares. They're still going to be worth the same amount of money, but now I have 100 shares, which will allow me to sell that upside covered call against that position to increase my yield as I hold the stock for the long term.